Happy Friday, traders. Thanks for joining me. It is Friday, the 6th of March, 2015, 8 a.m. Chicago time. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinion, market data, and recommendations subject to change without notice. Past performance is not indicative of future results. So the big thing, of course, today is the non-farm payroll, which came out a little bit ago, half hour ago, and has exceeded. Not much else overnight, very few releases. The overall news flow overnight was very, very tame. German January industrial production beat, came in at 0.6% versus 0.5. Eurozone Q4 prelim GDP was in line. And I want to remind you that the Greek Eurogroup meeting is scheduled for Monday. We'll tune into that and see what has changed. At 7:30 Central, we got the January trade balance at negative 41.8 billion versus negative 41.2. That's a low tier number. The primary number, of course, was the change in non-farm payrolls. Came in at 295,000 versus 235,000. Note that the market popped up 2 points, 2.5 points in the S&P, 2.5 points. That's one harmonic rotation on a number that was 60,000 jobs better. That says a lot to me. Change in payroll, private payrolls, 288,000 versus 225,000, another blowout number. Unemployment rate dropped to 5.5% versus 5.6% expected, and the average hourly earnings came in at 0.1% versus 0.2 estimated. Wage inflation seems tame for the month. Looking ahead, what's remaining, we have the Baker Hughes rig count, which surprised us about a month ago at noon. And at 12:30 Central, we have Fed's Fisher, who's a hawk non-voter, speaking at a Dallas event. And then at 2 p.m. Central, we have January consumer credit expecting 14.5 billion. And that pretty much wraps up the week. It's a normal weekend, no holidays or anything, but I want to remind everyone that on Sunday at 2 a.m. local time in the US and Canada, we spring forward 1 hour. So instead of it being 8:03 a.m. Central Time or Chicago time, it would be 9:03 a.m. However, since the U.S. has changed when we spring forward or fall back for daylight saving time, we now have, instead of a 1 week difference with Europe, we have a 3 week difference with Europe, which means that European products would be having economic releases and closing and opening at a different time. Check your calendars. Other than that, it's all about the technical picture. So let's pull that up. So yesterday, we ended up trading Hypo 1 pretty much exactly as expected. It did not push high enough, though. Hypo 1 yesterday was responsive selling into the prior day's range. Expected test of 98.50, but the key test below was the point of control at 96.50. We went to 96. Just a beautiful setup there. Nice 5.5 point rotation down, and then we went right back up to test the high we put in on the open at 21.01 quarter. Pull back to the mid here, to the mid and VWAP right there for a push through that now weak high. However, the target was expected to be 21.0475 for this gap, and 21.0550, and we really didn't push far enough. We went to 21.0275 to find sellers that brought us all the way down, back down to the IB low. This created a weak low. This rotation that went up to 2101.50 was a surprise to me. I did not expect that. I expected it to continue lower once it poked up and has pushed through the mid out of the opening swing and down into the IB low. The expectation is for it to pull back into the mid again and then push through the IB low. The target below that is this LVN at 92.25. It went to 93.25, so it missed it by 4 ticks. Following that, we would be looking for 2091 MCV POC, the old MCV POC, and then from there it just sat sideways. We did have a weak high. We did leave a weak high behind. We held above the mid and we traded above at the point of control, which was above the mid. So we're looking for a continuation higher overnight, which we got, but 2103.50 is pretty weak on that NFP number. Overall, yesterday's price action versus Wednesday's price action was indicating that value and price are moving higher. We're starting to one-time frame up, but it was very unconvincing. The expectation for today was that we would likely push to 2105.50. The next target up is 2108.75, and then I'm looking for further tests down lower, and I'll show you why here on the 15-minute. So let's pull up our 15-minute profile and see what we're expecting here. So we traded this upper fat area here, the high volume node. We've got a point of control of 2110.50, and then we broke below it on Tuesday, and we fought to push up. We broke below, tested the point of control of the lower high volume node, and then we pushed back up. And once we went through it on Wednesday and held here, notice the point of control on Wednesday is right on top of the high volume node from the composite. That is not a coincidence. The expectation was that the LVN is holding prices at bay. The LVN again is at 2101.50. And it's keeping prices on the lower end. It seems like the market's not willing to accept these higher prices for the moment. So the expectation is to test 2105.50 and fall back through and then go sideways today. But with the non-farm payrolls release being as strong as it is, and the fact that our reaction is to the downside, I'm looking for it to fight this 2091 today for a while. We have a double distribution profile on the non-farm payrolls because of the non-action overnight, but the market's really trading lower. Initially on the open, I'm looking for responsive buying back up towards the 2093 and potentially 2096, but really overall, looking for aggressive buying because this is non-farm payroll, looking for aggressive buying to respond once the equities push. And then we're back at 2099.75. If you recall, that's the key high volume node, low volume node left behind from a while back. I expect it to push as far as 2099.75 if it does get responsive buying. But overall, I expect it to finish lower today than yesterday. I expect the point of control to be lower. I expect the price action to be lower, and I'm expecting to explore lower prices. The key with this, with the action that's occurred since the high, the key resistance point right now is 2109. If you recall, 2108.75 was the high year before we pushed to 2117.75. Man, I'm saying a lot of numbers real fast. Hope you're keeping up. 2108.75. And then when we look at what has happened since the high and put a profile on it, we see that the key price up here is 2109. I'm expecting that to be a pretty strong resistance level for any push up. The market's not able to move away from these lower prices. So when we move this profile here to look at the double distribution, just like we did on the 15-minute, you'll see a clear delineation between the high volume nodes up top and the high volume nodes down below, and we're stuck below. It looks to me like the market's ready to rotate down, and that's the point I'm seeking to make. So what does that mean for you? What am I going to do today as far as the trade's concerned? I'm going to be looking for signs for buyers to step in. Again, we got a really strong number, and the overnight inventory is probably on the sell side. I'm looking for that to balance out a little bit. I'm looking for a pop-up on the open because of the number and because it's non-farm payroll. Again, I'm expecting it to push fairly deep in here. The key areas I'm looking to test: 2097 and a quarter for the value low. 2099.75 I'm expecting to be a strong area of resistance backed by 2101, and then I'm looking for sellers to step back in and hold it down for today. That's the key idea for the day. The second hypo is the opposite. We would get an immediate sell-off, push through the overnight low, fulfill the overnight stat, and then push through this 2085.25 low for a test of 2082.25, and then just push through by a point or two, and then come back to fill in this this void and stick here for the day. That's hypo 2. Looking at other products, Euro stocks are trading the sell-off from January 15th, 2008, and are taking back that much of the sell-off that occurred during that time. If we go back to 21 to that date, pretty strong selling. So this is, whoa. Let's bring that up real quick and look at, because we're templating that day. All right. There we go. So this is the day we're templating now. We are right here in time. These are continuous equalized rolls. In other words, we remove the gap that occurs on the premium of the roll, and we're trading this profile right here in the Euro stocks. Next key area up is 36.88 for the high, but we're approaching this naked point of control from way back January 15th, 2008, and are making new highs on the year. And you can see the structure is really fantastic in this product, all the way back up to 4,000. So everything looks a-okay in Europe, and everything is wonderful. So this market's just continuously pushing up. You can see the trend up is pretty stable. It has rotated down. It has checked the key price below that I talked about for a few weeks, and has continuously pushed through wherever it closed. It opened, no gaps, and is continuously pushing higher. Very methodical product and trade in the Euro stocks. I'll leave you with that. It's 8:15. A couple of reminders. It is Friday. Don't let your risk burn a hole in your pockets. What I always tell my prop traders, don't walk away with a big hole in your pants from ignoring your risk. It's not fun to go through the weekend with feeling like you got defeated in the market on a Friday. Pick your spots. It is non-farm payroll Friday, which means that the action is likely to quiet down very quickly as traders start their weekend early, traditionally with this product. And that's about it. Next week looks fairly quiet, And then I want to also remind Stage 5 traders that we have a webinar, the Ask a Question webinar at noon today. You should see the invitation for that in your mailbox here shortly. Thanks for tuning in, and I'll talk to you soon, and have a great weekend.